Welcome to the Sykes and Company PA video blog featuring Ollin Sykes. So today we're going to talk specifically for people looking to start up a pharmacy, whether they're buying or whether they're starting from scratch, and talk about the different kinds of business structures they should consider.
Okay.
So what's the first business structure that comes to mind for people who are starting up a pharmacy?
Well, typically the first business structure that comes to mind, Rachel, that I hear discussed a lot of time is why can't I just be a sole proprietorship and file a Schedule C? And frankly, that is an option. It is a simplistic way of startup. The problem is unlike some of the other structures we'll discuss in a few minutes, it doesn't give you a lot of protections, gives you a lot of potential IRS risk. And you might say, well, what are you talking about? What I'm specifically talking about is your pharmacy further develops, and you gain some traction in terms of revenues. The IRS typically audits entities that have lots of revenues, and typically pharmacies do have. The average pharmacy in this country has about $3.8 million of revenue. So that's a typical candidate an IRS would clearly pull for an audit. And if there's any way possible you can keep the IRS out of coming in on you at any time, whether it be now or the future, you definitely you want to keep that in mind. So we just don't like to use sole proprietorships at all.
You and I have talked a little bit about buying an existing pharmacy versus starting organically. And it sounds like people who are starting organically might need more capital, they might need more investment. What kinds of business structures lend themselves to investors or help in that way?
Okay, that was a good point. The For purposes of let's say organically grown stores or new startups, and we're seeing a lot more of that these days. You could clearly say that a partnership or a corporation form of business would lend itself probably much more favorably to the lending status, notwithstanding the fact that, as an example, a partnership, you can get that form without having any required legal forms in most states. You don't typically have to register with the states. You don't have double taxation as an entity, and the entity does serve as a pass-through arrangement to the shareholders to the partners for purposes of taxes. Unfortunately, a partnership, which would lend itself well to the financing structure, provides unlimited personal liability for the general partners, which is not necessarily good. So you clearly would see that as a disadvantage. And typically, each general partner is going to be jointly and severally liable for partnership debts, which is typically not known to be good. So we typically don't like to use partnerships. We do see some partnerships in this particular world. But the probably the most popular entity status we see as a startup would be with the forming of an LLC early on in the planning stages, because a limited liability company, each state has its own rules and regulations with respect to that, but it does typically provide personal liability protection for its members. It allows you to pass through profits and losses to the owners. Profits in this situation can be unequally distributed. So if you have angel investors, for example, that help funding this pharmacy up front, you might have a different structure set up for them initially until they're paid back. And of course, the big issue here is they can be taxed in multiple ways, in that they can be taxed as S corporations, SC corporations. They can also file a sole proprietorship Schedule C, which, as I mentioned a minute ago, I really don't like. And they can also be taxed as partnerships. So you got a lot of flexibility in how they can be taxed. But clearly, when I get those calls 6 months to a year out where somebody's looking at starting up a pharmacy, I will encourage them to go ahead and at least set up an LLC. Go ahead, get a federal ID number. Go ahead, because you got to have a federal ID number to get your DEA licenses and other regulatory approvals. And you can go ahead and get everything going through that entity and decide on the actual tax structure of that at a potential later point in time. But there's just a lot of advantages you've got here. But you got to be careful. You got to work with your corporate attorneys to make sure that you understand what the laws are in each state, because they are slightly different in each state. But I believe all 50 states do allow the limited liability choice now. And of course, the main thing being is it provides that personal liability protection that's so important to so many people, especially in the pharmacy arena.
So is there any downside to the LLC? Is there any reason people should pick a different structure?
Well, I guess there's always downside to anything, but frankly, I think with the flexibility of the LLC structure, with the fact that you can be an S corporation, which you can be a C corporation, which you can be a partnership, and you've got that separate liability, personal liability protection. You've got ways to bring in angel investors. You've just got so much flexibility here that I frankly don't know of big issue downsides that you may have with that. Other than if you're a single member LLC, you would file a Schedule C, which I don't prefer. So that would really be the only downside is if you didn't have another person that was brought in as an owner in that deal, and or if your spouse was you and your spouse owned that single member LLC, your spouse and you are considered to be a disregarded entity for tax purposes, and that essentially means that you still would file a Schedule C. So um, that would probably be the disadvantage. I just don't like Schedule C's on pharmacist tax returns, period.
This sounds pretty complicated. Should I get connected up with an accountant really early on when I'm thinking about starting up a pharmacy so that they help me work this through?
Yeah, it's vitally important you get competent counsel really on two major fronts. You clearly need competent pharmacy advice and somebody that has experience in dealing with pharmacies and with the tax rules and issues in your particular state, as well as on a federal level. And you need a healthcare attorney specialist who can assist you and help you, especially in the startup formative years, first year, even pre startup, to make sure you got all your regulatory approvals in place so you can start adjudicating claims on day one that you open. And so many times, I see people waiting too long to address that issue. And it takes so many months and weeks typically to get all that in place. And there are people out there that can make that happen pretty quickly. You just have to know who they are, where they're located. We fortunately have the opportunity of working with them almost on a daily basis, and that's very important, I think. But yeah, you need very competent pharmacy, legal, and accounting assistance in the pre-startup phases to make sure you've got all your particular issues covered without question.
Now, I'm interested in talking about kind of two specific cases in terms of the business structure and how to set it up. And the first, you've been saying that a lot of the baby boomer pharmacy owners are reticent to sell their pharmacies. So it's
Right.
hard for up and coming
It is.
future independent pharmacy owners. Are there ways that you can work with the business structure to kind of phase out an owner and phase yourself in as the new owner? Or how do you do that?
Well, there are numerous ways of doing it. Typically, there's such things called junior partnerships. I know the NCPA has a whole area that they strive to educate up and coming pharmacist owners to be with a junior partnership process. But frankly, in today's environment, with the financing so readily available now, with pharmacy transition to boomers, we're seeing more and more pharmacists just exit all at one time, and we're seeing a trend away from the junior partnerships into complete ownership all at one time. And again, with the SBA guarantees that are in place with multiple pharmacy lenders that are in the marketplace in this country, and there are multiple vendors that are doing this, you're able to. You might say, well, how in the world can I buy a $4 million pharmacy if one comes available in my area or my region? The answer is you just need to make sure you got a good credit score. You don't necessarily need a lot of cash. I've seen situations where $15,000, $20,000, $25,000 is the only money that is needed to be put down on a $4 million pharmacy transaction in terms of revenues. And they may have borrowed $1.5 to $2 million to finance that transition and to have working capital. And that's made possible. You might say, well, that sounds too good to be true. Well, it's not. And the reason that it's not is that all these transactions have been made possible by these SBA guarantees that they're providing the lenders that are specifically vertical niche lenders in the pharmacy arena. And that is available today. The key thing is making sure your credit score is in place, and that you've got some cash and that you got a willingness to be an entrepreneur. But all those opportunities are widely available today to those that are working in big box land and that are looking and striving to be an entrepreneur themselves in the pharmacy industry.
And if that's my goal, and if I'm, maybe I don't have a pharmacy picked out in my region that I can buy, should I go ahead and form the LLC anyway? Should I get that rolling, even if I don't have a target in mind?
I would. Again, a year out is still not too early to go ahead and just form that LLC, get that federal ID number, get that bank account open, and begin to do your homework, research, and due diligence, and begin to work with your advisors. Because a lot of times you might be working to open up a new location on the corner in your favorite hometown, and then all of a sudden, 10 miles over to your right or 15 miles to your left, there may be an opportunity come up or something that you hear about that's an existing operation, and you can very easily take that same enterprise and make that work within the framework of purchasing the assets and or the common stock of an entity that may be existing out there. So you still are not going to be losing much, if not anything, by doing that in advance. And you've already got the process with your due diligence started, and you got a heads up on it.
And is there anything specific I need to know about my business structure in terms of attracting or working with angel investors or setting myself up in a better position for financing?
That's a good question. A lot of that will be dictated by the investors themselves, the structure here, whether you're an LLC, taxes, an S corp or a C corp or a partnership will all depend on what the angel investor may dictate. If you choose to use an angel investor and not use the outside pharmacy niche lenders that I'm referring to, um, the their advisors of the angel investors may dictate different structures. And I would dare say that probably the partnership and or LLC structure of that might bode well for that. But that would kind of be the exception that I see, bringing an angel investor in. We do see some, but not a great deal of them. Again, with the pharmacy niche lenders that are in the marketplace today, you don't have to have a lot of cash to start up these enterprises, but you're going to have to get some things done pretty quickly if you are not already in that due diligence stage where you have certain aspects of it already taken care of.
Thank you for joining us today. If you want more information or have any questions, please feel free to contact Ollin directly.